On board, Anuj Khanna Soham, the founder, MD and CEO at Affle. They're the ones which have come out with the most dhamaka set of numbers. Anuj, hi, morning. Tell me how the company did perform in Q4 and what your expectations are going forward.
Well, thank you for having me on your show. Affle has just reported fifth financial year results after the IPO. And we are very, very delighted with the results that we've got this year, especially in Q4. It's been a record-breaking result for our company. Over 500 crores of revenue, over 40% growth year on year, and delivering very strong financial results from even bottom line perspective. For the first time, profit before tax of our company exceeded 100 crores. EBITDA was close to 99 crores. And this is a really, really strong result for our company. And we are outlook for getting into the new financial year, FY 2025, is very strong because this growth has been very broad-based. India business is growing well. Emerging markets business and India business together contributed to over 72% of our business. And we have seen a very strong recovery even in developed markets. So we are very bullish and very optimistic.
So that was the pain point, the developed market business, which was under pressure for some time now, which you are referring to is recovering. Can we infer from the comment you just made that the worst for international business segment is over now?
Well, for our last financial year was a tough year for us in terms of developed markets, but our international business in emerging markets was continuing to be robust, and therefore we had a balanced growth, in the last year. In the quarter four, the developed markets business also grew really well. We actually got 100% growth year on year in the developed markets in Q4. So the overall growth story of our company has always been intact. The challenges in developed markets were specific due to certain situations, and we are well past that now. We have achieved full recovery across, and we are seeing broad-based growth across all our markets.
So what is the outlook when it comes to demand trends and the levels of client confidence? Can you give us an outlook for the first half of FY25?
So our outlook for the first half of FY 2025 remains very, very strong. If you look at our numbers for even Q4, if we were to have even a sequential incremental improvement, a slight incremental improvement, you would see substantial growth versus what we did in H1 last year. So we know our numbers for H1 FY 2024. We know our numbers for Q4. If we take that as the exit run rate going into the current quarter as well as into the Q2, we try to look at that, we should see very favorable results in terms of sequential as well as year-on-year growth going forward.
Right. Anuj, the other thing is, what type of acquisitions are you planning over the next 2 to 3 years? And how is it that you are intending to fund these?
See, in terms of acquisition, I think the first statement that I would like to make is that in the last several years, we have fully integrated all the acquired businesses into our core platform. And it is absolutely supported by our supply cloud, the Converge AI supply cloud, which is unifying, simplifying the entire ecosystem and giving us economies of scale as well as efficiency. What we have also done is we have proven that our model of doing acquisitions, integrating acquisitions, expanding the margins of the acquired companies over a period of time is a model that we have shown good track record and success with. It has had its challenges, but we've also shown how we can overcome those challenges within a well-defined time like we did in the last financial year. Now we have sufficient amount of cash also being generated. If you look at our results for FY 2024, you would see that we are generating cash at a very healthy rate. Almost 80 to 90% of our profits get converted to cash consistently. And therefore, we are a very strong cash flow positive business. Going forward, 2 to 3 years view, I think there could be room for some more strategic acquisitions, but we'll be very selective, very careful. And our philosophy would now be integrate within the first year, full integration of the acquired asset within the first year, unlike what we were doing before, where we were taking almost 3 years to do the integrations during the COVID time. So even our last acquisition, YouAppi, was fully integrated in less than 1 year into our core platform. And now we are operating as one single unified system and platform, going to market, offering our customers a whole suite of services and solutions powered by our supply cloud.
And can we expect high growth across all segments? Do you think that the worst is behind us? And additionally, I just wanted to know if you can give us any sort of insight on your revenue or your margins.
I would think so, yes. Definitely the worst is over as far as we can tell. And this coming financial year, even the outlook for not only revenue growth, but also margin expansion is a positive outlook. And we are very bullish about what we can achieve going forward in this year. And also on a long-term basis, I see Gen AI technologies, other emerging technology trends is something that Affle is deeply prepared for, ready for. We have already been integrating Gen AI capabilities and use cases across our entire tech stack. The consumer platform tech stack of Affle is Gen AI ready in many ways at the moment. We are always adapting, exploring. One of our products where we have implemented vernacular strategies for using Gen AI to generate vernacular keywords and recommendations has been widely adopted by our existing customers across all verticals. So even the vernacular verticalization strategy is working out well. So I see scale as well as I see efficiencies in terms of margin happening as we expand from here onwards.
Right, Anuj, great to have you on the show today. Thank you so much for talking about your numbers. And Affle clearly has been one dhamaka set of numbers, and stock as well, showcasing that enthusiasm pretty much. For the broader end of the market, though, we've fallen a little bit from the day's peak. In fact, the mid-cap index, as you can see on your screens, is down a good 6